name's Phil Basterfield. I'm a wealth manager here at AMG Wealth Management, and today I'm going to use two companies to bring to light how the investment world is performing at the moment. I'm filming this in December 2022, so you can put a bit of context to that. And the companies that I'm going to be showing you today are Coca-Cola and Amazon. Their current year-to-date performance is highlighted here. One company is a positive 6.8 and the other one is a minus 48. The quick question for yourselves is to decide which company do you believe has had that performance, Amazon or Coca-Cola. The reason for using these two companies, I'm going to explain in a second, but I've taken them from a fact sheet that most clients will have in their portfolios anyway. That fact sheet is the Global Equity Fund. If I scroll down onto the second page, you'll see that on this fund that we have here, both Amazon and Coca-Cola. I've just highlighted them for you. You can find this out on your own wealth portfolio by going online or by taking it from the SJP website. From there, you can look at page 2 on all of our fund fact sheets and see the top 10 holdings that you've got. Now, the reason, like I say, for showing you these two is that they have very different stories for the year. I'm going to open up a new page for you to see now. This is the 9th of December. Like I've said, it's 2022 that we're filming. The year-to-date performance, as you can see here, I've selected the year, is a positive 6.8%. In contrast, Amazon, same date, 9th of December, and for the year is a minus 48%. So what does that tell us in terms of where the investment world is heading? Well, as investors, we're long-term investing in companies. The fluctuations of a price of a share is largely down to whether or not that company is going to provide earnings out, or actually they're going to provide you any money back in that short term. That's largely driven by people who want to just go in and essentially take money out from a company. So we're not traders, which is what a trading arm would be doing essentially. So traders will go in and see what the earnings are going to be over a short-term period. We're investors and we're here for the long term. So why have Coca-Cola had a positive year? Well, very simply, when you think about the figures of Coca-Cola, they sell 1.9 billion units per day. So that's per day units that are sold. If that price was increased by 0.1 pence, that would then provide 19 million pounds of profit per day. And over the course of a 12-month period, it would be approximately 7 billion that's been generated from a 1 pence increase. Now, again, the reason for a date stamp for where we are today is that we're not at 0.01% of inflation or increase in goods. We're around about 11% or 11 pence. So if you start extracting 11 pence on a unit of Coca-Cola, you can then start doing the figures, and actually you might not get enough noughts on the end of your calculator to give you those answers. So that's where Coca-Cola have probably done quite well over this last 12 months, because the traders will see, well, actually, if they increase the price, they're still getting a lot of units sold per day to increase those margins. Conversely, though, obviously, that hasn't happened with Amazon, okay? Different trajectory as a company. Coca obviously globally based, as are Amazon, but they're more established in certain areas, distributed across over 200 countries in the world. However, obviously, what does happen is companies provide a return known as a dividend. So very simply, if I was to have £100, okay, and I took that £100 and I was able to buy shares of companies at £1 each, so I've got my £100 and I'm buying shares for £1 each. That means that every time I buy into the investment world, I'm buying 100 shares, £1 a share and £100. Now, if the market or the price of that share goes up, this month, I'm not actually buying 100 shares, I'm now buying 90. if the price goes to £1.20, I'm now paying more for that item, so I'm only getting 80 shares. So that's a 10% increase, and that's a 20% increase. Simple. When it comes down and I go minus 10% and I go to 90 pence, the units that I now buy at this stage are 111. When it goes to minus 20 and it's 80 pence, I'm now buying at that stage 125. There are a number of companies out there in your investments that are like this. Coca-Cola will be providing me with a dividend. That dividend will be going in to buy new units in shares like Amazon. Now, don't forget Amazon, we worked out earlier on, they're not at the minus 30, they're not even at the minus 40. It's the minus 47%. The equivalent number of units that I would get for Amazon would be 192. So when we tell clients to invest when the market is in negative territory, it's because of things like this. We're able to buy more units in a company than we would do if it was the opposite way. So when you look at your investments, have a look at the second page of some of your fact sheets. You'll see how they perform. Just do a bit of research and a bit of digging to find out a bit more about that company. But this is happening on a day-to-day basis. Our fund managers are looking at this all the time to look at the companies who are doing well, the companies that are on growth trajectory, where we can provide value over that medium to long term. So hopefully that's brought that to life. Two very different companies, but for the year to date, obviously providing some returns in a different way to our portfolios and to your investments. Thanks for watching.